trading, spot trading, margin trading, is, to be honest, not going to be our moneymaker. In fact, the purpose of the license really is to set up the platform for trades to take place that is very similar to how the bank operates, where they let you deposit your money and make withdrawals, but that's not where the money maker is. So the other part of my job really would be looking out for business partners that we can venture on things like tokenization, can do OTC, and working with the financial partners there within, the fintech industry to see what other possibilities there are out there, and then going to the regulators and say that, hi, we are trying this something new. Is there any regulation? Do you want to look into this together? And things like that. So an example would be this, like I said, the tokenization project we've actually been working on for about almost half the year now. The regulators were very, how do I put it? They were very insistent on wanting a clearinghouse license. So the idea of a clearinghouse is to, go by the order book, right? But with blockchain technology, it kinds of make the purpose of a clearinghouse and the order book obsolete. Because with blockchain, everything's 24/7 and running. It might be even more efficient than the order book, But still, they want it to be regulated under clearinghouse, and that's another 2 licenses that we're looking in and getting, because that's what the regulators want, right? So I think really is to identify what really is your business purpose here. My purpose here is to set up a platform, get the license in, so that I can do projects that make money. And at the side, if my trading, my spot, only right now we can only do spot and most probably margin. And if that might bring some extra revenue, good for us, but really don't count on it. So I would say really a lot of expectations.
Yeah, makes sense. And on that, what do regulators want? Erika, this Centrium website, your website has a very interesting article on Ripple versus SEC. I would advise everyone to read that. It's good analysis there. And your observations, either, I'll let you pick, Ripple versus SEC or Binance versus FTX. How do you compare those two?
Well, once again, I love reading, and I encourage everybody to read at least, fairly good law firm analyses of these very famous cases. So law firm analyses of why FTX, what did FTX do wrong that was so wrong that Binance is still alive and FTX is not? There are some, facile things I could say, which I'm not going to say, but what did FTX do wrong is they made the worst mistake you can possibly make, which is they, played with customer assets. Now, Binance got caught for AML KYC issues, and yes, I'm sure they were also playing with customer assets. Nobody knows. Who knows? But the point is that they were able, if they were playing with customer assets, by the time the regulators got in to look at them, they had returned all the customer assets. So again, FTX got itself in such a big hole because they didn't seem to understand the most basic of accounting points that anybody who's starting their own company needs to understand, which is the company's assets are not your assets, and please do not commingle them. So that's number one. That's what regulators want, all right? That's why they want custody. That's why they want custodians. That's why they want clearinghouses. They don't want you to be running around. That's why they're so worried about staking. They don't want, what happened, for example, with Block Crafters, you may not know, it's a Korean entity that went down because basically all of the client assets were staked, and then the CEO went rogue and took 50% of those assets and gave it to his friends to make more money. He wasn't running away. It wasn't theft. He was literally just giving it to his friends so they could make more money. And then those friends went down in the Luna collapse. And so, bam, they've lost 40% of everything that they had. And not only is it about commingling of client assets, please don't do that, but also risk, right? I mean, it's all about, that's what regulators want. They want you to sit there and think, what could possibly go wrong? This is the internet, whether it's blockchain or not, I don't care, it's the internet. People hack. They're really good at it. So, you know, you must be aware that this is going to happen to you. You must be aware of counterparty risk. You must be aware of all these risks. And most of these guys, I'm really surprised sometimes, because we live in a society where we know all about scams. We've all heard of somebody being scammed, etc. And yet many of my clients truly believe it will never happen to them. They will never have their identity stolen. There will never be a hack on their network. I remember Binance's first hack. I was out to dinner with CZ, okay? We all went to, we were drunk, so drunk. Several of my colleagues, young colleagues, I'm the oldest, I'm supposed to look after them, were like found in a Taiwanese like police station the next day because they forgot where the hotel was. We were drunk, okay? And during that drunken time, nobody could find CZ when the hack happened. And we were like running around the hotel, knocking on doors. Where is it? Where is it? That was the first hack. And he literally said, but why would we be hacked? And I'm like, why wouldn't you be hacked? This was just when the fame was rising. Of course you're going to be hacked. So having a risk assessment, understanding that you may trust your friends, but we should still assess them from a risk perspective, and make sure we can yank all the money back before they disappear. These sort of basic risks are really important.
Thank you, Erika. Such amazing, interesting perspectives. We could sit here all day and keep talking, but in the interest of time, I think we'll have to wrap up. But one last round, one piece of advice to startups and new projects. Do or don't do. Take your pick. Okay, Hao Pin. Sorry, Hao Wang, you can go first since you raised your hand.
I probably just want to give a very simple advice I've been looking at hundreds of projects almost on a monthly basis. One of the key questions when I ask them, okay, this is a very interesting thing. And secondly, tell me what are the risks if I put, say, 100,000 or 500,000, 1 to 2 million to you. He said, oh, the risk is if the market turns down. I say, okay, there's nothing to do with you. Most of the projects actually don't think risk as a financial professional think risk is more than just the market risk. Of course, the market can affect, but more importantly, it's about the operational risk. The teams who are actually going to move the money is inside. How much are they going to spend on this each day? Are they going to use it for the projects or for something else? Secondly, if you do projects, make sure you stick to it, because investors just hate to say, oh, I saw you last year and they're doing something new, and this is actually a very bad sign. So stick to it. Many of the projects, I hate to say, but I love those projects in Japan and Europe, Northern Europe specifically. 5 years ago when I met them, I said, oh, you're still doing this? And I was surprised. And they're still the same team doing the same stuff. Although it's slow, but it's actually committed. You know, you can whether bring serious money or serious clients to them who are financial institutions and want to do long term. The last thing you want is send a deal, 3 months later, they're doing something else.
Totally. Makes a lot of sense. Thank you. Hao Pin.
Yeah, so to close this off, really, what I'll say is the crypto and Web3 space really touches on quite a lot of regulatory frameworks. We've talked about securities law. There's derivatives regulations we need to be concerned about, commodities regulation, there's money services and stablecoin sort of regulations as well. And now every jurisdiction is coming up with its own crypto virtual asset sort of legislation. So there's a lot to navigate. Your project and your token may implicate one or more of these frameworks, and it's not that easy. So if I were to be able to give anyone advice, is really think early, plan ahead, and see how your project and your token fit or implicates any of these frameworks so that you can plan for the long term. At some point when you issue the token or when you raise funds from your investors, you'll be able to say that I've done everything in a compliant manner, and I'll be able to clear all the due diligence processes without issues. And the main commercial benefit of this is that if you have a regulatory compliant product, you can distribute it to more markets than otherwise. Because if your product is an unregulated security, in many jurisdictions, you will have to turn off access to these products or tokens. And I don't think that's good in the long term. And really, it's worth the cost to seek advice at the start.
I think it's very well said, and it's very easy to lose sight of that, especially when you believe that you're working on something that's very decentralized, and decentralized is a long journey. So thank you for sharing that. Athena?
I think for me might sound a bit naggy, but my best piece of advice really is that when you embark on a project, especially with business partners involved, before signing an MOU or anything, do KYC on the company first. So this is actually when I was in Kazakhstan and really speaking with a lot of people at the same time. So having worked at banks and stock brokerages and being involved in the KYC process, you can really dig up quite a lot of things. So usually after the very first business meeting, the first thing I will do is to ask my AML officer and say that pull up the report, do a full KYC, or sometimes even before meeting the business partner. Then sometimes when I meet them the first time, I'm like, hey, you know, I think your company did a KYC on me previously, because normally they have a whole system where all the companies are registered. When you pull out a report and you pay for it, right, the company is actually notified. And then I'm like, yes, that is my Singaporean way of doing things. That is like the bank, the bank part of me, where I want to know who I'm working with, what their history is. And if I have any problem with the history, I'll definitely speak to my partners about it first. And thank God I did, because in the tokenization project, the company that I'm working with, the bank actually had a problem with their background. And so I actually had to explain to the bank that, oh, this one we are very much aware, but this was actually before they were bought over by a different company, and they actually were doing, you know, some company restructuring and everything. So what they did was that they buy illiquid companies that are going to bankruptcy, and then they do a turnover and everything. So I think it's very important to know who you're associating with, because once you do a project with them, you are more or less tying down your regulatory obligations and also your legal obligations with them. If any part of it goes wrong, that's your reputation down the drain. And I work very, very hard to make sure that my reputation in Central Asia is stellar, and it's not something that I'm willing to risk anything for.
Makes a lot of sense. Thank you for sharing that. Erika, final word.
Final word. Well, look, the one thing that I always try to get across, the one thing I say to people is, you all think that compliance and regulation is a barrier to growth, it slows things down, and you actually have to change your mindset. I mean, think about the different people we have here. If you're thinking about investors, if you're thinking about listing, if you're thinking about partnering, you need to be the kind of person that people want to partner with, okay? And that means compliance and regulation becomes a marketing tool for you. The fact that you know what licenses you should have, even if you don't have them yet, fine. Tell me why you don't have them, but you know you're supposed to get them, okay? You know you're supposed to have them. Even if you're going to do whatever it is that you're going to do, if you can speak the language of compliance and regulation, if you know this space, oh yeah, we don't want to do what Ripple did. If you can speak about other cases that happened, if you know examples and you can speak like this, you're going to impress the investor. You're going to get the money, because this is a marketing tool for you. This is showing that you're one of us. You've been there, you know what's happened, you've heard about it, you know what to avoid. Maybe you can't avoid it yet, that's fine, tell me why not. But you know what you should be avoiding. Already I'm happier with you than the guy who literally is like, oh, market risk. Like, what the fuck? Okay? Guys, you got to be a bit smarter than that. So look at this instead of a barrier or a pain in the ass or whatever it is, you should be looking at it as, I need to learn about this so that I can look and walk the walk and talk the talk, basically.
Thank you. Thank you, everyone. This was really exciting. I loved all the insights, and thank you for tuning in. Thank you.
Thank you, Charu, for the wonderful moderation.
Thank you.
A big thank you once again to our moderator and panelists with the first topic of the day, governance and regulation in an increasingly decentralized world. Okay, so we're going to move on next to our second talk of the day. It'll be a topic on navigation opportunities in the bull market, the next 100x. And to talk, let's welcome Mr. L. Lee, co-founder of SenSen, and Hypemaster Jam on stage. A round of applause, everyone.
Morning, everyone. My name is Al, and glad to see all of you this morning. We've got a nice half hall full. Really excited. So maybe I'll just kick it off this morning by talking about this topic because I'm very happy that Blockchain Festival Asia has invited me back in this year. Last year I was around here, and the year before, talking more about Bitcoin adoption. And then what I saw last year was a little bit more into payments before the start of the whole stream of stable coins coming in, like PYUSD and stuff like that. So this year I'm back again to talk about the bull market that everybody's excited about and opportunity for 100x. So for the friends around in the room, thank you for attending the session. For those who don't know me, maybe a quick background about myself. So I started out as an investment banker about 10 years back with CIMB JP Morgan. Has been in the capital markets for a long time, so TradFi experience. And then in more recent time, 2016, that's when I actually started my crypto journey, where my good friends Andrew and Gabriel brought me to this thing known as crypto mining. That's how I got started, actually. And then along that path, I went deeper and figured out how to actually build mining machine, so Ethereum mining machines. So that's how I got started in the crypto space. And I started building this machine and selling it to people. That's sort of my first venture into crypto. In 2018, 2019, I was very lucky to be one of the pioneering members for Mr. Ta Hongfei's on-chain group in Singapore to start up a first custody business over here, which is licensed. And in 2021, I was invited to join DTC, now known as DTC Pay, which is a MPI licensed company to deal with crypto payment, right? So if you do see them around, they're sort of the swap provider plus crypto payments company over in Singapore. Moving forward, what I'm doing today is myself has started a company known as SenSen. It's a data analytics as well as payments processing company that is going to deal with stablecoin as well. But today that's not the focus. The focus is what else am I doing in Web3, which is Jam. I'll talk about that later. But essentially that's sort of my background. So I've been through TradFi, crypto space. I'm a little bit more Web3 these days. And that's why I'm on stage to share. So there's no surprise to everybody this chart comes out. And today we're in sort of a start of a bull market. And the prices have went up a lot this year. In fact, we're somewhere around $62,000 for Bitcoin right now. And if you're in this room and you've experienced like I do over the years, you know that the trend is pretty clear, with some differences over the period. The last 10 years or decades, right? It's always 3 years of green, 1 year of red. So if you look at the trend, it's typically like that. Why? That's just how the bull market cycle has been, about 3 years. So in 2022, we saw a red market, right? You've got FTX, you've got Celsius, you've got a lot of negative news. So it's a big red year. Last year, 23, was the first green year, right? So if you think about 2024, 2025, you sort of know what kind of trajectory we're going to see. Right, and when the cycle might end. But of course, there are a lot of external factors, right? For example, global macroeconomy and stuff like that that could affect the whole market in terms of crypto. But what's clear is right now we're in a hype. Everybody is excited about bull market. The real question is, what's been hot? So I think a lot of people in this room might have seen this before. If you recognize this, anybody? Yeah, perfect. We've got 2, 3 hands. Awesome. So this guy's probably made some money out of this, which is inscription. So in the start of this year, there's something known as BRC20. If you've not seen it yet, you can Google it up. It's basically the ability to inscribe something, tags, into Satoshis. Right? So that's your minimal denomination of Bitcoin. And this has been hot in the start of the year, right? Prices pumping, and if you've seen tokens, if you've not seen yet, and this is no shilling, no financial advice, things like rats, cats, all kinds of stuff, right? They sound like meme coin, but they're just meme coins working on BRC20 standards. This has been really hot, and prices have shot up by so many times. Just Audi, one of the first pioneering coins in BRC20 or inscription standards, has gone up by way a lot, at least 3 times, 4 times over the period of this year. And you can imagine the inception or starting price is much lower than what it was, $25. So these are your 100x opportunity type of tokens or projects that people want to look at in this bull market. But the truth is, I'm here to share with you something like that is not what I call a 100x opportunity for myself. Why? Because the fundamental is weak. Why do I say so? There's very little business use cases that you can actually do with respect to BRC20. I do not see any real business use cases for wider adoption except for speculation. And that's how I feel about it. Feel free to challenge me, but that's really how I see BRC20 standards. So we then want to talk about what potentially might be a 100x opportunity with fundamental. Anybody know what's this? So we've only got one person. So see, this is a 100x opportunity because nobody knows about it, and only 1 or 2 people knows about it. And that's what you want to get in on too. Any guess? No? This is Farcaster. Farcaster is a decentralized social networking platform. And I have nothing to do with Farcaster, just to be clarified. If you think about Farcaster and what it is actually a decentralized format of social networking, similar to Twitter. So what are the key functions of such an application? It's really for users, content creators to get on board, start casting or tweeting. The key difference, what it does versus traditional Web2 platforms like Twitter, is the fact that it allows you to monetize much better for every content that you put out there. Later, I'll talk about some of the traditional problems that Web2 content creators face. But just look at some stats over here. Over 300K registered users, about 50K active users. Who knows how many users, active users, tweeters have? Okay, I'll just give the answer out here. It's actually about 520 million active monetizable users. So if you take a look at the number of active users, this is less than 0.1% of Twitter. 0.1% of Twitter's active user. That's a very, very small number, but why are we getting excited? Because just a few months before these stats, right, at the start of the year, in December last year, there was only a few thousand active users. It's only a few thousand active users. So the platform itself has seen an almost tenfold increase in active user. And that tells you something. People is getting excited about this platform, what it promises, what it can do. There are, of course, some changes that the platform has implemented, some good things that have done, roll out things like frames. I won't go into details about that, but that's how they got the active increase in number of users. And the purple bars over there show the active increase in users. So you can see that it's actually pretty flat until recently. But it's starting to come out, and that's why, again, we're here to talk about 100x, the opportunity. It's getting traction. That's what I'm here to share. And just to give you some sense of number in terms of daily users and revenue generated. If you take a look at what they are generating in terms of revenue over here, cumulatively, it's about 750K in terms of what Farcaster has generated. And that's kind of the opportunity that the platform has. And if you think about it, if it's a decentralized social networking, the money mainly is not just generated by the platform, but also returned to content creators. And that's important. But what's the real opportunity? It's for a decentralized social network to start stepping up the market share of Web2 social. So again, I like to look at some stats as usual. And when we do that, the whole Web2 social sort of opportunity in terms of revenue would likely grow 1-fold to about $413 billion by 2028. And the number of users is what underpins this growth, right? You have over 4 billion active users on social media. And in fact, the CAGR growth is about 13%. So all this number points to a continuous growth in Web2 social networking. And right now, when we look at decentralized social, it's still in its very early phase. But I'm here to share about the opportunity, what it presents and promises. So these are some of the issues still being faced by Web2 social network content creators. They're critical to understand why these are the problems and what decentralized social is trying to solve. One of it being centralized platform actually takes bulk of the fee from content creators, right? And this you see across your IGs, your TikToks, all the platforms. And this platform comes with unclear, opaque, we say, algorithm in terms of logic of recommendation. Right? Today, if you're subscribing for something, you might have hashtag, you might have a channel that you subscribe to, but how this content actually gets pushed up, right? A lot of them is through likes, there are different algorithms, but they are definitely opaque to you, to all the users. And then there is also the issue of IP, right? How do you stop people from copying your content, which is what DLT promises to fulfill, and that's how NFT also got interested, right? NFT was like your ability to sort of trace to the origin source, with the blockchain address, your provenance is clear. That is also something being brought into decentralized social. The other one is an easy way, for content creators to truly monetize their followership and the content they are making. Today, it's all dependent on platform. For example, YouTube, right? X number of followers gets you X number of cents. But there are better ways to monetize and to control the sort of a pricing curve that you want for your content, right? Today, if you go to YouTube, you can't tell YouTube, oh, once I cross 1 million followers and likes on the next video, it's going to be $2 per likes. You can't do that. But that's what decentralized social promises. You set your own curve, and the more popular you are, the more well-paid you are. That's one of the key differences that we're seeing in this space. So these are some of the problems that DeSo, or decentralized social, is promising to solve. And what it is, essentially, just the words on the screen, it's a concept that really bridges Web2 social media, right, with DeFi, right, decentralized finance. And it's got to be a sufficiently decentralized environment. It's not fully decentralized, for sure, right? Because there needs to be certain centralized elements, including storage, including certain rules for it to take off. But someday, it will move towards being more decentralized. So that is essentially what decentralized social is about, or DeSo today. So if you've learned nothing today, at least you learn a new term, something in the market called DeSo, and look up. So one of those successful examples recently, again, you might have heard or not heard, I hope you have heard about it, it's what we call FriendTech. Of course, people who know about this project, you might debate again, it's not really successful. I'll explain why. So FriendTech, essentially, it's an application which has been pushed out sometime earlier this year. What it simply does is allow content creator to create things, what we know as key. They could have 100 of this key, and followers could buy into this key. Now, for the first time, when a social content creator is successful, people holding these keys are rewarded. Now, if you think about it, I'm on IG, I have a bunch of followers. I'm on LinkedIn, I have a bunch of followers. But the more money I make out of my content doesn't mean they are rewarded, except for entertainment, except for content absorption. They're not rewarded monetarily in any way. This is the first time where users could actually buy into a content creator, and as the content creator gets more popular, there is a promise of these investments into the content creator being more valuable, because if you think about it, there could be a token gating mechanism where if you hold my key, it's just like a subscription, right? On Twitter, I'll give you more content. And this content could be entertainment, it could be financial advice, right? It could be anything. But there is that promise. And if you think about it, in a limited condition where there are a number of keys, or say 100 keys, the only way to get them later on is in a secondary market, which it could cost even more to buy over these keys. So with that promise, something like FriendTech has launched this in a market where it creates keys for content creators. People buy into those. It gets hyped up a bit. It registered over 60,000 unique users just in a very short span of about, I think, less than a week. In 72 hours, the app actually registered over $1 million of revenue, pushing it to the top second revenue-generating Ethereum project in terms of the social space. But just now earlier on, I said people who know this project might debate whether it was successful because after 72 hours, the user activity sharply dropped, right? And the revenue generation capability goes away because it stopped at key creation, buying and selling, but it wasn't able to follow up with more stuff, right? Of course, there was other concerns, but this was one of the biggest issues that we faced. But this is really the start of decentralized social network. And what we're going to see next, going forward, is going to be more exciting. So earlier on, I spoke about Farcaster, right? It was just one app, one platform. But this is the real landscape, right? Which is why in the next 5 minutes, you want to sit up and listen about this. Because it's huge, right? It's no longer just about one single app doing one single stuff. Farcaster allows users, just like on Twitter, to be able to cast, to write stuff, post content, but do a lot more, right? What more? Explore that on your own. But there is a whole landscape of things going on in the FR ecosystem, right? There's front-end client, there's protocols, there's commerce capability, there's consumer end product, there's content creator, there are channels, events, tools, a lot of stuff going on. And whether you are a developer today, it's a good place to build. You're a consumer, you're an investor, this is somewhere you really want to look at whether there's an opportunity for you. What kind of opportunity, even in commerce, even in doing with wallets, tools, if you're in a payment space, TradFi space, there's so many opportunities for you. And if you're in a legal system, how do you protect these guys, right? IP rights. So many companies need help, right? So a lot of opportunity and business use cases, and this is what I call a potential 100x opportunity. Something with fundamental and has a promise to deliver true business use cases and opportunity. This is a 100x growth opportunity. So I just stop here for a while. If anybody wants to take a picture, you can take it with me inside. Probably. No, just kidding, okay. So one of those that I'm working on, I'm excited about is Jam. Right? I'm sure a lot of people haven't heard about Jam. I'll be surprised if you have, because Jam is pretty new. What it does is also in the DeFi ecosystem and beyond, it is a client that delivers the ability for social content creators to monetize the stuff that you created, as well as your own IP. How does it do that and how we do that? A few things. So content creators could actually come up with content, and if you're starting to look at the price above, it's a very low Ethereum number. But it's exciting because this is what the cost is worth. Traditionally in Web 2, as an influencer, when somebody asks me to post something on LinkedIn or IG, you get paid about anywhere somewhere between less than $1,000 to a few $1,000s to make a post, right? And you do that. Today, it's a little bit different. We put a post out there. If you want to sponsor this, you don't pay me. You go ahead and buy the cast up. If you buy this post up, it gets hot, it runs up in the ladder ranking. So you don't have to pay me directly. You decide how much to pay, right? And the market would challenge you to that. If there is a better way to sort of push up another post, that's for another bigger player with more capital to push up their own post. So it becomes a market challenge. It's no longer about your direct access to a content creator, right? So in that sense, I also benefit because I created the post, right? I get benefit from whoever is buying up those posts, pushing up and ranking. And then you get pushed up in a hot ranking chart. People get to read about that, and that's what you want as a service provider, as a merchandise seller or as a content seller. You actually want it to be in a hot list, right? And of course, if people think that I'm doing a good job, they feel that investing in my key because I'll give them some subscription, some special content in future, they can always buy up things like keys that I have. So this is the new way to sort of look at social-fi, and what's really hot. So this is a hot sort of competitive arena, and if you haven't been into sort of social-fi, I really think you should seriously look into it. Again, at the last point of today's talk,